businesses whose income is below 5 million.
Right.
And turnover tax is paid as a final tax, and therefore you're supposed to pay 1% of your gross income, and it's paid on a monthly basis. It's filed on a monthly basis and paid on a monthly basis, and therefore turnover tax by itself is a final tax, and therefore once you've paid for turnover tax, there's no other legal obligation on you to declare or file further tax on that particular income.
All right. One that would get confused when presumptive tax again is mentioned. So the question then would be, does the levying of turnover tax and that of presumptive tax then amount to double taxation, or what is the difference between these two?
So that question ordinarily was a question that was of concern when turnover tax was introduced, because it's a period in time when turnover tax and presumptive tax coexisted, but presumptive tax has then been repealed. So presumptive tax was a tax that was being paid as and when you are applying for your business permit, and you pay a percentage of your tax so that KRA is guaranteed to recover the rest at the end of the year. So when they introduced turnover tax, what they said is that those who had paid presumptive tax, you are supposed to deduct it from your turnover tax at the end of the year. But then that is no longer applicable, because that only applied for the year when turnover tax was introduced. Otherwise, right now, we don't have a tax known as presumptive tax. So all payers of presumptive tax are now on the turnover tax regime.
Okay. All right. Interesting, because I remember there's a time there was that debate that got very many, people in small businesses a little bit worried of how the government would rip them big. But then, as you've heard, it's a whole different affair right now, and the main focus then would be the turnover tax. Are there any exemptions under the turnover tax?
So I wouldn't say that we have exemptions for turnover tax. It's only that turnover tax is ideally a separate tax by itself. It creates a threshold of who can pay turnover tax, but it also excludes others from being in the regime of turnover tax. So one of such persons excluded will be people in professional businesses like myself, for obvious reasons. The government is not able to quantify how much business I've done in a month because there's no inventory.
Oh, right.
So, of course, management fees and professional fees, be allowed to pay turnover tax. Employment income also, because you already have a strong regime of pay-as-you-earn, you not be allowed to pay turnover tax. And, of course, anyone else whose business is outside the threshold of the financial threshold of turnover tax is not allowed to file turnover tax. Instead, they're encouraged to file normal corporation tax.
All right, so in this case, can one choose not to be subject to turnover tax?
Yes, absolutely. So the law does provide for you to make an application to the commissioner and tell the commissioner you're interested in filing your tax in the alternate regime of the corporation tax. I don't know what reasons you'd have, because the corporation tax for small businesses is a very expensive regime for tax for filing, because you have to keep your books of accounts, you have to do all those things that other bigger businesses do. But turnover tax has these exemptions. But yes, if you feel you want to join the other regime for whatever strategic reasons, then you can apply to the commissioner, then the commissioner can give you approval to join the other regime and not be under turnover tax.
All right, well, and what then would be the benefits of focusing much on this? Because you say if they take that other angle, then it will be more of a toll in comparison to turnover tax. What are some of the other benefits that come along, in remitting this tax?
So I think there are significant benefits. You can imagine a business that is earning, say, 200,000. So if you're earning 200,000 in a given year of income, then ideally this is a business that can't afford to keep, for example, a tax accountant to be filing their returns. And therefore, some of the advantages of filing your tax at the end of every month at 1% gross means you don't have an obligation to keep records, to keep financial books of accounts, and therefore that cost is removed from your books. Secondly, you don't have a VAT obligation, and therefore the cost of collecting VAT, filing, and computing input tax and output tax is again removed from the business. And therefore, turnover tax is a very simplified regime, and therefore it's cheaper for small-scale businesses to be in that regime, as opposed to the corporation tax regime, which requires a bit much more financial knowledge and support from consultants.
Okay. Monthly rental income tax, really, really important. We've touched on this also. Just what then would be the monthly rental income tax?
So monthly rental income tax, again, is introduced as an alternate regime to rental income tax, which is taxed under Section 15. So this this particular tax was introduced to make sure that those who are filing residential monthly income, were not subjected to doing very heavy lifting at the end of every year computing their tax returns. And therefore, monthly rental income tax, which they call MRI, is filed every month for any person whose income is between 288,000 all the way to 15 million. And the business has to be, the rent has to be residential rental income. So if your business has commercial rental income, then you don't fall under this bracket. Again, a standard tax, it's paid on 10% of what you collect, and it's final tax, and there is no other obligation to pay any other tax on it.
Okay. Yeah. All right. If my building, say, has commercial properties that is on the level of the ground floor, and residential, say, on the first all the way to the fourth floor, then where do I fall? Which rental income tax should I proceed to pay?
So you'd have to separate the two parts of the business, of the building,
all right,
because they are under different tax regimes.
Oh, yeah.
So your commercial property cannot be under residential
whatsoever.
income.
Does it not get complicated?
It can be a bit complicated, but the idea is you try apply segregationally. You say, how much am I collecting as monthly rental income, and how much of this is commercial rental income? Then you separate the two so that you end up having an account that runs your commercial properties separate from account that runs your monthly rental income. On the residential income, you're going to pay the 10%. On this other one, you're supposed to pay it at the end of the year, and you are supposed to issue VAT.
Hold it. Are there certain limits in terms of monies, amounts that are incorporated in this, especially on the commercial aspect? Maybe to a certain amount is where you're supposed to file the returns. What happens then in the event that this does not get to that threshold?
So you remember the VAT threshold for a long time has been 5 million.
Yes.
So you of course you'll find that your rental collection in a given particular month, the rental collection as it falls below the VAT threshold.
All right.
And therefore you will be exempted from filing for VAT.
Okay.
Because you do not fall within the bracket of filing VAT. But then again, you're expected to file corporation tax at the end of that year.
So in the event that the commercial bit is way lower than 5 million and the rental bit also is as well lower, but combined they will amount to 5 million, what happens? You're safe?
So you will still have to separate, because you remember, in as much as the income is coming from one building,
yes,
the source is different.
All right.
One source is residential, one source is commercial.
And therefore one could be safe in this case?
Absolutely.
Okay.
Absolutely. So you separate the two, you'll be able to make an analysis and see, for the commercial, is it enough money for me to say that this warrants me to register for VAT and charge VAT on it?
Okay.
If not, then your obligation then is to file it at the end of the year, where you usually input it under your annual tax return and subtract the expenses, and whatever is left is what you pay. So the difference is that for this commercial property, you'll be allowed to subtract your expenses, and therefore the tax will be levied on the net.
Okay.
But then again, the rate is 30%, not 10%.
Not 10%. Oh, so the rate goes higher.
The rate goes up. If you're a company, it will be 30% of the net. But the other one for residential, you do 10% at source, and that's it.
All right. So you speak of management, and I remember that time we were having this conversation, there was a bit of, a tricky aspect of understanding that, well, if this money is go into managing this entity or not. I mean, how then does the taxpayer get to understand the nitty-gritty details about this, and therefore, would not push a person or an owner of this certain building, into the bad books of the commissioner? Yeah.
So you make reference to managers, a management fee cost.
Yes.
So of course, for your residential income, you are not allowed to, it will not matter whether you're managing it yourself or you have an agent.
Okay.
Because your expenses are neither here nor there. They're not allowed for purposes of filing taxes. But for the commercial bit of your business, you would then be allowed to subtract the management fees incurred in running the business for profitability.
Okay.
And therefore, management fees becomes a key item in the deduction at the end of the year when you're calculating your taxes for purposes of the commercial bit of your property. But it's an advantage, because if you have a split kind of scenario like what we're discussing, it means then most of the expenses that are incurred that cannot be segregated. For example, management fees, if it's a flat rate, it's hard for you to say that this flat rate, this percent applies to commercial, this percent applies to. Then you might have advantages that some of these costs can spill over and be carried heavily by the commercial property as opposed to residential property. And some of those are some of the advantages you can have when the law doesn't ideally regulate how this segregation should be done.
Okay. All right. Now let's go to a different one and speak of, PIN numbers and what it is that we have and how then they come in handy in, the filing of taxes. And so one would want to ask, I have a PIN number or I have a PIN, but I have not traded. Do I have to file my returns?
Yes, you'd still have to. You remember we said that the PIN is the property of the commissioner.
Okay.
We are only allowed to use it, and therefore the commissioner needs to know what you've done with it that year. And
so
of
you'd
course,
rather file zero?
You must file. Whether you have income or not, you must file a nil return. And of course, the nil return will be to just demonstrate that I have a PIN, but I am not in any gainful employment. And then you can put your zero.
Okay. Yeah. Well, that's interesting. You fail to do that, penalties?
There'll be a penalty, yes, for non-filing.
So you have zero, but you've not failed, so therefore you'll have to pay.
Yes.
All right, you'd better
because
file.
You have an obligation. It's failing to meet your obligation. You still have to be penalized part.
All right.
You're not being penalized because you don't have income. It's because you have not done your part as a taxpayer, which is to say I don't have any income.
All right. Well, that's interesting. Then we take a quick break. We come back and understand some more on what it is that we've touched on previously or the previous episodes. Why crocodile inaweza tokea juu. Hiyo sijakula hata unataka nikufe kabla ni. I don't like it. I don't. Kai na hipo ikitokelezea ivuruche simu yangu. No, ni sawa. Those who know me will tell you I'm not a lover of large volumes of water. But for you, we rove the different parts of the country and beyond just to make sure that we bring you the experience. We educate you, we entertain you, and we inform you.
That it's not political and it can do something.
As we sail the boat of Morning Cafe to enlighten you, entertain you, and inform you every Monday to Friday, only on TV 47.
Woo. Construction can be quite a task, but how do you move from finding your piece of land, sourcing the right materials, getting the right labor force to put up your building? Or better yet, how do you source for a building that's already built?
Just a small size of land can suit just a big maisonette because you are going high.
How do you ensure you get the right finishes to bring out the aesthetic value of your property and make it not only look good, but also feel good?
The buyers in this area are the buyers who are able to pay cash.
Well, we have it right here on The Realtor on TV 47, where we demystify building right here in Kenya and analyze the property industry for you to take advantage when acquiring your next piece of property.
Every February, we hear men joking about going to a men's conference on Valentine's Day. We laugh about it, the lucky ones end up having a decent Valentine's Day, and we move on. But what we do not know is that men actually do meet up. Men do sit down and have conversations about things that affect their day-to-day life.
Let me ask, does money make the man?
Give them the gifts, shower them with everything you want to shower them with, but keep your money to yourself.
I, for one, have always been curious as to what goes on in a man's mind, specifically an alpha male's mind.
Adam, yule kwa Biblia anasema ni mtu wa kwanza duniani. Wewe unadhani kama angekuwa hana yale matunda, hana ile garden yake pale ya kukaa, angekuwa tu ni mdomo tu anamfuata Hawa. Oya, mimi ni Adam.
Welcome to the men's conference, where we make men alpha males. My name is Archie, the only female allowed at the conference.
All right, still here with tax lawyer Edwin Thiongo as we focus much on the numerous forms of taxes that we have, especially the ones that we've touched on our previous episodes, and therefore that is to welcome you to make sure that you go back and dig into the files, as always across all the social media platforms, TV 47 Kenya, and you get these great details on these forms of taxes that we have discussed before. And today we're just picking the commonly asked questions questions by you, and we're having Edwin take us through the same, just giving us a preview of technically what these forms of taxes are all about and what are the basic things that you need to understand. Therefore, you will not be in the bad books of the commissioner, because we all understand when the commissioner comes for you, they come hard, and in most cases not always friendly, probably because of ignorance, and some of this information is just out here at your disposal. Let's take advantage of this moment and learn as much as we can. So when we speak of the fact that you probably have a PIN and you have not traded, and therefore you need to go and file returns, are this then what would equate to KRA nil returns?
Indeed, yes.
Yeah.
So if you don't have any income and you're filing a return to just declare you don't have an income, it's called a nil return. And a nil return essentially is not a return that requires payment. It's just an obligatory filing. You're simply doing it to fulfill your obligation that I have not had income.
Okay.
And sometimes nil returns take different forms. You can have a nil return filed for the different levels of income, but have some income in one aspect. For example, I can file a nil return to say I have not had any dividends income, but then I might have had some management fees paid. And therefore nil returns are income based as opposed to PIN based, because one PIN can have 2, 3, 4, 5 obligations. And therefore when you file a nil return, you're filing to declare on the various levels of income or obligations you have on your iTax, on your PIN, which ones have you had income and which ones have you not had income. And sometimes if generally don't have any income, then you can file a nil return for every obligation you have.
Okay. Yeah. All right. Now, what is employment returns in this case then? I think I'd want to believe that this is a person who's employed and therefore they are getting salary. Okay.
So you remember we said that because the employer has an obligation to deduct at source and remit this to KRA. So the employer remits pay as you earn, which is an obligation on the employer, not the employee. And we said that the employer cannot file taxes for the employee.
Okay.
So the employer is just creating a record for KRA that this person has been with us and this is how much we pay them, this is how much we paid for them until the end of the year. So at the end of every year, an employment return is the obligation by the employee to take the returns filed by the employer in the form of a P9 and declare that income in the iTax portal together with any other income that they have besides employment income.
All right, and therefore then that means every other income should be declared.
Should be.
Every other form of income that you have.
Absolutely, yes.
As tiny as, as little as it may be? No.
So, but subject to, of course, for example, there are some subject to, if it's individual taxes, we begin looking at it from, I think it's 288,000 per year.
Yeah.
So if you income falls below that, then of course, even if you are to log in on iTax and try to file, then there is no tax bracket for that income.
Okay.
So you must, any income that falls above the bracket for taxation for the taxation bands, then you're supposed to declare it.
Okay.
But ideally, you are supposed to, every end of the year, file your returns to say, on this income, I don't have any income, either because it's below threshold or because I didn't earn it. If it's employment, there's a match I have earned from employment, and then you file. And sometimes you can have an employee who's worked for 2 employers in a given year. Then it's the obligation to pick the returns from this employer and the pay return from this employer and cumulatively say, this year I've already paid you the whole year's employment income, and therefore I don't have anything else to pay, and therefore you declare that, and it's considered that you file your return.
And in this case, end of year is what month? Because some, there are people who are just joining into the bandwagon of taxation and might not be having information about this, and therefore they'll be excited waiting. Because sometimes even when these advertisements run, we rarely look at them. We'll be waiting for December so that they can now go back to the portal to try and find their file their returns. So for the benefit of that one person who's just joining the bandwagon, when we talk about end of year, what exactly do we mean?
So ideally for tax returns, for let me begin first with corporation tax returns.
Yes.
For corporation tax returns, they're split into 2. If you're going to make a profit, and on the first quarter of the subsequent year, you must have filed your returns.
Okay.
If you're not, by 30th of June, you must have filed your return. Now, generally for everyone else, By 30th of June is the last day for you to file your returns. And therefore, even if your financial year ends in December, by 30th of June in the subsequent year, you must file your returns. So if someone is still waiting for them for filing returns, now I think they might be late because the deadline was, I think, last week.
Yeah. That's the most unfortunate thing. That's why it's important. So next time you're keen, this time around you're going to be penalized, you'll pay the penalties, but next time you need to be keen. I have heard you mention something to do with return of income. Just what exactly is that?
So return of income is generally a return filed other than, it would essentially include employment income, but a return of income mainly, the reference would be to businesses, non-individual organization, non-individual taxpayers. So you have partnerships, you have your joint ventures, you have your companies and non-government organizations. So a return of income is essentially saying how much have we made in a given year and how much are we paying taxes on it.
Okay.
And therefore, it's essentially more or less the same thing as a return, but the return of income, it is essentially assumed. You have made some income and you're declaring that income for purposes of assessing taxes and paying.
All right. Corporation tax. Do partnerships pay for the same?
No, partnerships don't pay corporation tax. Partnerships, in fact, the partnership PIN has no obligation to pay. So when you incorporate a partnership, one of the mistakes a lot of unqualified tax advisors will do is that they'll create a PIN on the or they'll create a paying obligation on the PIN. But essentially how partnerships work is that a partnership is supposed to, at the end of every year of business, calculate profits, share that profit amongst the partners, and then the partners go and pay the taxes based on their share. So the only obligation a partnership has is to declare income generated from a year of income. Then it doesn't pay. Then the obligation to pay is transferred to those who receive the share of the profits. Difference from corporation tax, where it's the company that declares and pays.
Okay. So the self-employed people would fall under corporation tax?
So self-employed, it depends on the structure of your business. If it's a sole proprietorship and you're running it alone, then of course you'd pay it as though you're paying an individual tax return. And the calculation will be based on the tax bands, and you will be able to know how much you owe depending on the income you're generating. If you're running as a partnership, it is still self-employment, and I've explained how you'd approach that. If you're running it as a company, again, it is a company that would essentially declare and pay, and you as an individual will be required to pay tax on the dividend that the business pays you. Tax at source at the rate of 15%.
All right, business-wise, I want to believe that there's that angle where you make profits, and therefore when you file returns, you are looking hugely at that. Scenarios where you've made zero totally, I don't know whether then that would equate to scenarios where one has incurred losses. And how then do you proceed to file tax for the same? If it's not zero returns, but you have incurred losses, there are numbers here. What exactly happens in?
Right. So when you file your return, it calculates so there's a ledger we fill out. When you're filing your returns. Essentially, Section 15 of the Income Tax Act allows businesses to carry forward losses. So that means if I finish this year and I've declared and I have a loss, that means when I start filing my taxes in the next year, I'm allowed to bring forward this loss to the next year of business. And that loss is subtracted from the taxes I owe in the year I've made some money. So therefore, businesses, it is not essentially a nil return. They declare income, but declare it in the form of a loss, a trading loss. And they can carry that forward the subsequent year of income, so that they offset now the taxes they owe in the rest of the years. Now that is a challenge that is being faced with the introduction of minimum tax, which requires them to pay taxes on that loss. So again, it's a very messy situation, because companies now are being told to pay 1% of whatever they have sold in gross. And those are the challenges now that the cases in court are trying to challenge.
Okay, voluntary tax disclosure program. I think this was introduced at the time I had officials from the KRA, encouraging the people on, focusing much on this. It appears as though I mean, that the commissioner has not been able to go down on ground to probably understand who are the people who are eligible to pay taxes. And therefore they say, you know what, if we've not reached to you, how about you proceed and get to us and save yourselves the hassle of us coming, you know, or this catching up with you. Just what exactly is voluntary tax disclosure program and who qualifies for the same?
Okay, so it's called VTDP. So you remember I said that approximately 95% and above of the taxes paid in this country are paid by self-assessment. It's people like you and I who declare how much we have made and we pay our taxes. And therefore, KRA also acknowledges that it doesn't have enough manpower to police Kenyans to pay taxes.
That's true.
So VTDP is meant to encourage taxpayers who have not filed their taxes over some time and have huge or small or whatever form of liability. But the qualification is that all taxpayers with tax liability. And my reading of that is the assumption that any person who feels they have a tax liability that is not disclosed, then they can benefit from this program. So this program essentially is to give incentives for you to self-declare taxes, assuming you have a company that you've run for 1 year, 2 years, 3 years, you've never filed returns, but KRA has never come to you to ask for these returns. It's a chance for you to come and say, actually, I didn't file returns in this period of time, and I'm willing to pay my returns right now, and therefore I've come for you to allow me file my returns without penalizing me for not filing. So the incentive is that the commissioner is allowing you to file taxes without penalties, as though it's a current return.
All right.
So all taxpayers, including taxpayers in the diaspora, are allowed to declare their income for tax purposes.
Okay. All right. So when does it become then effective, or when does it become effective?
So it became effective from this year, and the provision of as to how it was to operationalize, it was supposed to be run for 3 years, 2021, 2022, and 2023. So in every year of implementing VTDP, they give remissions based on which year you have declared your income.
Okay.
So from 2021 is, I think the end of this year will be the end of the first year when you've been running the program. Then next year they'll still have it, and the next year they'll still have it. But of course, the incentives change as you progress towards 2023.
So when you speak about the quantity of relief that is granted under VTDP, what exactly would we be looking at? The number of periods that you have declared yourself, or what?
So it's actually the period when you use VTDP.
Okay.
So if you use VTDP in January or in the course of 2021, it doesn't matter whether your tax returns or your liability springs way back 10 years back. It's not really significant. What's significant for you to get the remission and waiver of interest is the year in which you file. So if you file it in 2021, you're given 100%. That means a cancel of all penalties and liabilities that have accrued.
Oh, okay.
And this is important because you have a lot of Kenyans who have not filed their taxes, not because they intend to defraud, but because of ignorance.
Okay.
And actually, there should be a push to go to the grassroots and help Kenyans who are not much aware of such programs to take advantage and file their taxes for them to be allowed waiver on the interest and penalties. So 2021 is 100%. Next year, that reduces to 50%. Then subsequent year, 2023, will be 25%. Meaning, if you want to get 100% waiver, then file in 2021.
Okay.
You still have 6 months to go. It's enough time for you to just say, here I am, I have filed my returns, please allow me not to pay these penalties. And actually it's implementable, it's being implemented. But the challenge we have with Kenyans is that we wait until the last year, the last month. At that point, you're only saving 25%. 75% of your penalties can actually be way much more than the taxes you owe.
That's true.
In some cases, I don't know, and it's also subject to a lot of discussion, whether tax liability includes non-filing. Where, for example, I can say, well, I didn't have any income. The only problem I have is that I didn't file.
Okay.
So, and I also think it's something that people should try out. Say, I have a company, it has been dormant for 10 years, but I'm coming to file my returns to say, in the 10 years, I didn't make any money.
So
I've come to use VTDP for you to not to penalize me for not filing.
Okay.
So the waiver of penalties and interest includes waiver for non-filing obligations because it also brings across penalties, though it doesn't bring interest, but penalties also would fall under non-filing penalties would also be waived.
Okay. All right. You've seen the debate on matters tax and the fact that we have these commodities, and it was almost like immediately. It is interesting how some friend of mine was saying that, you know what, my gas just like ended at a point where the government had declared this, and therefore that simple phone call, you're told, you know what, price imepanda kwa sababu government imepandisha. Probably that was even the previous stock and all that. It doesn't seem to augur well with the people on, the overtaxing, or I don't know whether it's overtaxing or the raising of taxes on some of these crucial commodities, especially the online space on matters internet, where a majority of young ones are now focusing on that direction to earn a living.
Remember the last time we discussed the budget, I said this.
Yes.
I said if you overtax the paying class, there's a paying class and unpaying class.
Okay.
And the paying class, and I'm using paying and unpaying, trying to deliberately avoid mid-class. Because not all mid-class are paying. But the paying class in our country is a very small fraction. If you look at the returns filed vis-a-vis the total population, it's a small fraction. The people supporting our economy are very, very few. So if continuously find ways of taxing them more, of course, you'll have such concerns where people are asking, now, what does it mean that I have already paid you pay as you earn, I have paid you this, I've paid you this, but yet when I want to do anything online, you've introduced a new tax. If you want to get a loan, you introduce excise duty on my loan. If you want to, it becomes significantly difficult for the paying class to continue being eligible to pay. So one of the problems that you've seen with taxing commodities is that when the law is drafted in a way that assumes that we are all aligned with the Treasury's thinking, that to an extent that taxes start being levied immediately. It then doesn't make a lot of sense. Why don't create an effective date and say, for example, give a good example how we have a lopsided angle to taxation.
Okay.
When it comes to KRA giving remission and waivers for penalties, they're saying we introduced a law in 2019, but it's going to take effect in 2021. Why can't we do the same thing for commodities?
Oh yeah.
Why don't we say we're going to introduce this tax now, but it's going to take effect in a month, 2 months, 3 months. That allows suppliers to take out the old inventory, and as they acquire the new inventory, the taxes start flowing. But unfortunately, it's been introduced in the middle of the supply chain. So the person benefiting most is the person in between, because when they bought it, they didn't buy it with this tax. So taxation for me and policy should be people-driven. And unfortunately, we're getting to a place where the government seems to be very, very desperate to raise funds.
Right.
And the creative ways of raising funds, I think they've either ran out of them, because I don't understand why anyone would want to tax the digital economy so harshly that even setting up an e-commerce shop becomes such a big struggle.
All right.
So they introduced changes to say, no, we made a mistake here. Digital economy, if you are a resident company, we will not tax you. There are exemptions. But then that's a problem, because if it's introduced midstream and you keep amending, changing, you remember when you do that, companies are also adjusting their systems. And who's paying them back the cost of making these adjustments?
Okay. Well, that's interesting. And still on the last bit, that is on the aspect of relief granted, there's always that fear of the unknown. There's no even that trust that, KRA is being genuine with you. Sometimes you feel like it's a bait, so that once you come there and tell them that I am here to declare this and this and this, then they'll say, finally, we get a hold of you. Just how complicated can it be, especially when we're looking at the aspect of amnesty? Does it escalate further to also the aspect of payment of refund to the taxpayer? I know you said that one can take advantage, or we'd hope that they would go to levels of us being allowed to take advantage of the same. When it's the aspect of refund, one must refund, because you've been paying taxes, and then there's this introductory of the aspect of some bit of amnesty, especially for the few who've not been paying taxes. When it comes to the aspect of refund, are there conversations of one being exempted from the same?
So the conversation around refund for commercial businesses is a painful discussion. Because see, in as much as KRA is willing to give exemption and waivers for interest and penalties, I have not seen like there has been a similar drive to refund taxes they are holding or owing businesses.
It's true.
In a sense that we have a lot of businesses that are struggling, especially now when we are facing serious recession because of COVID and the other economic challenges. But the companies that KRA owes money, that money can be used, for example, to pump back in the business for them not to lay off their employees. But there is no clear guarantee that we are concertedly working towards making these refunds available. One, the refund process is a very, very lengthy process. So you see, KRA will say that it takes place in between 2 or 3 months. But the truth is, for you to get this refund, KRA needs to do a verification audit. How many employees does KRA have to conduct verification audits across all these taxpayers who are claiming? Very few. So it takes a longer time. The goodwill in the law is there, but the manpower isn't there. And therefore, as we, for example, aggressively give on one hand and ask people to self-declare on one hand, we should also aggressively look for the capacity to release what we are holding for people to continuously employ more people and increase the tax bracket. One of the problems we'll have, and I think it's something that I've seen, and actually some time back we wrote an article about it, and we said that many businesses are likely to close because of the VAT regime. Because the VAT regime is meant to be self-sustaining. But unfortunately, it has now become an end in itself, that the pipeline ends at KRA. So people are collecting money, pushing up the chain. When it gets to KRA does not release it back to the economy. It goes to Treasury, and Treasury says, okay, we'll refund. So what is happening is that people are pushing out their money from the system, but are not getting that money back in terms of the input claims. And of course, businesses will start now shrinking, and eventually we'll see a lot of industries closing up or people opting to go to other countries because of the high taxation.
Well, so unfortunate. We hope it does not get to that point. If possible, then we solve the scenario. We're coming to a close. What would be your parting shots for this session of, questioned or the questions commonly asked in regards to the different forms of taxes that we have touched on this program? So
I think for me, my main focus will be on VTDP because it's one of the things we've not discussed in the previous.
Yes, we've not discussed
in the previous sessions.
It appears as if I have discussed it because I remember, like I said, once it was introduced, I had officials from KRA coming to just enlighten people on that.
So one of the things that we need to know is VTDP is not an absolute privilege or an absolute amnesty. It has strict qualifications. So if KRA, for example, has given you a notice to audit your company, then VTDP does not apply. If KRA again has taken you to court, you're litigating over a tax matter, then VTDP does not apply. If the current investigations over your taxes, VTDP does not apply. So my call to action and what I think we should take home is that if neither of those things has happened and you know you owe,
please. So
the biggest way to prevent audits and investigation is to take advantage of VTDP and say, I have come to declare. So once you have filed that declaration, then KRA cannot investigate further or cannot, for example, take you to court to sue you for having not filed your taxes on time. The only other thing, and you alluded to it, is that this system, of course, is not just meant for KRA to lose money, because KRA is not in the business of losing money. It's also to increase their grasp on more taxpayers, to bring more taxpayers into the system, which is, I think, is a strategy to expand the tax base. So therefore, if you file and apply for VTDP, one of the things you need to know is that automatically now you're on the iTax system, and of course you need to continuously now just keep up with your filing.
That's true.
But it's a good thing and people should take advantage of it. If we can all do it in 2021, even better.
Okay.
But for those who wait towards the end, of course, be willing to pay 75% of your tax, of your penalties and interest.
That's true. Before we finish this particular season, I hope we'll have touched on the VTDP, yes. And I would hope that somehow would understand what would be the importance of this relief that the likes of BBI, now that politics runs the world, is proposing. The likes of, speaking of where there's going to be a tax relief for youths, those who are starting to get into business, while we acknowledge very important the importance of payment of tax. And therefore, what other angle should we have as opposed to giving this relief that would probably detrimentally affect the collection of taxes or the collection of revenue for us as a country? I hope someday.
I think let me just say, I'm not in the habit of discussing politics.
I know.
But sometimes I say, for tax purposes, we don't need policies to implement tax incentives and promote tax filing and make the economy thrive.
Okay.
The law right now, Linda, provides for the commissioner with absolute discretion. In fact, the Constitution does not have even one provision on how taxes should be paid. It simply says that taxes are paid so long as there is an act of parliament allowing for them to be paid. So if the government wants to give incentive to use, do we need to amend the Constitution? Just tell the commissioner, pass the law, people in this sector.
Because there's nothing that binds them constitutionally.
Nothing.
Okay.
So I don't discuss politics much, but sometimes I like to when I see things.
I know. And that's why I thought you'd be the right person to discuss this. So I'm sorry. I'll channel you towards that direction just for a moment for the benefits of us all.
Not a problem.
All right. Thank you so much. Edwin Thiongo, tax lawyer with KCK. Thank you so much. This particular segment of Business with KCK, we always hold it every Tuesday as we focus much on matters business, but importantly, the first season channeled towards discussing matters taxes, various form of taxes that we have touched on so far. And again, my clarion call is that you can go back to our social media platforms, TV47 Kenya across, and you get some of the episodes that we have had or we've held in terms of understanding taxes. We close it at that. I look forward to see you again tomorrow. My name is Linda Alela. That has been that moment of morning cafe as I look forward to a great day for you and for me. Bye-bye.
Completion of the express highway will make commuting from Lukenya to Nairobi a matter of minutes. Invest now in Silver Gardens, a prime property located at the foot of Moore Hills by UIP Real Estate, just 55 kilometers from Nairobi CBD and easily accessible via Kangundo and Mombasa Road. It's just 250 meters from Mudhwani Shopping Center. Water and electricity are available. A 50 by 100 plot for just 500,000 Kenyan shillings, inclusive of a title deed. We have flexible payment terms and daily site visits. Are you looking to buy, build or invest? Book a plot with us today. Call us on 0708 423244 or email us at info@uip.co.ke or visit our website www.uip.co.ke. UIP Real Estate, the home of affordable land.
Hi, my name is DJ Protege, aka the life of the party. I've been in Simasako for the last 7 or 8 years. It's a true definition of growing with your partner. Well, I've taken up the loan facility as well as the saving facility. So I have a monthly contribution and I also bought shares in the Sako. I started off slowly with small money, but now my savings have really grown, so it has really opened so many doors for me. As you can see, I bought equipment with it. It's helped me a lot in terms of paying for school fees. So the one thing I can tell people out there is that Simasako, with them, it's true to what they say. Anyone else out there who's expecting to actually have their money work for them, to actually try out Simasako.
We are Simasako, a true reflection of you.
Akili, Akili, this is Akili. She has a secret. Tell her.